Virus spreading and Wall Street is taking notice. The major averages falling further into the red today after the CDC confirms the first U.S. case of a mysterious new virus that has already killed at least 6 people in China. The Dow ending down. It looks like it's going to settle out 149 points lower, snapping a 5-day winning streak, dragged down by shares of Boeing as well. The stock tumbling after the company pushed back its timetable for the return of the 737 MAX, saying it doesn't expect regulatory approval until at least the middle of the year. Tough day. I'm Melissa Francis.
I'm Connell McShane. Welcome to After the Bell. S&P and the NASDAQ both also in the red. The NASDAQ did hit an all-time high earlier today, then pulled back from that. So we have a lot going on. We're awaiting some results at this hour that could really shake up markets tomorrow with the Netflix numbers coming out. The first of the tech titans to report quarterly earnings this season. First time for the company that will have numbers where we can compare it to Disney Plus. So a lot of people looking at that.
Yeah, that's a big story. And then overseas, President Trump sitting down with global leaders at the World Economic Forum in Davos, praising his economic record while back on Capitol Hill. The Senate impeachment trial is officially underway. We'll bring you all the breaking headlines this hour.
And as we go into the Netflix numbers, just starting to cross right now, let's bring our panel in to talk about them. Scott Martin joins us from Kingsview Asset Management out in Chicago. Liz Peek here in New York, columnist at FoxNews.com. Both Scott and Liz are Fox contributors. Deirdre Bolton's in the newsroom, joining us in a moment. Scott, with the numbers as they cross. The revenue, $5.47 billion in the most recent quarter, is better than expected. The street likes it early on. The stock's up more than 2.5%. So we'll fill in the blank with Netflix. But as I said coming in, Scott, everybody's wondering, how do you compare now? You got Disney Plus in the game.
Yeah, you've got a tough competition kind of setting up, I think, Connell, both in 2020 and, frankly, 2021 and beyond. I think that's really the concern for the stock here, especially given the rally that the stock has seen, which has been very nice for those maybe stuck in Netflix over the last, say, 4 to 6 months as far as how the bounce has occurred. So to me and for us, we sold our Netflix, as I shed the tear here, about $20 ago.
I'm going to interrupt you, Scott, right in the middle of that, just because I want to get Deirdre in. What do the numbers look like as the stock turns a little bit lower, Deirdre? Most recent quarter and the outlook, whatever you have.
Yeah, okay, Kyle. So I'm getting a number here for earnings, which is $1.30, and I'm still going through some of the lines here, because if that is apples to apples, that would be a huge beat, because Wall Street was looking for earnings of 53 cents a share. So, I mean, that would represent, as I said, better than an 80% beat, obviously, on that front. I'm just going to make sure that it is apples to apples, but that's the first number that crossed. For revenue, ever so slightly higher. So Wall Street looking for $5.45 billion, which would be a 30% increase quarter on quarter. Netflix so posting just slightly higher there at $5.47 billion. One thing I do want to call your attention to, though, is the forecast. And the forecast for this current quarter, the first quarter, does look a little bit light. I'm really being picky here, but $5.76 billion is what was expected, and I'm seeing indications from the company at $5.7 billion flat.
So again, that's the revenue. That's a little light.
Revenue, and that's for this current quarter, so not to be confused with the fourth quarter, for which I'm still going through the figures. I do want to highlight during the regular session that volume was double the normal usual, and thanks to our brain on feet in here, Charlie Brady telling me that.
Can I give you some other numbers that crossed while you were talking there, Deirdre?
Yeah, please.
Fourth quarter global streaming paid net additions, 8.76 million. Fourth quarter global streaming paid membership, 167.09 million. And then there's the forecasting for the first
Melissa,
quarter.
Charlie,
go ahead.
I have two voices in my head, which is actually even fewer than usual. Yeah, exactly. Low for my count. But as you said there, that global streaming net adds 8.76 million, and that is certainly the right number to focus on. So that's higher than what Wall Street was looking for, higher even than what Netflix had guided. And this is really where the Wall Street, the analyst community, investment community is looking for growth. Rich Greenfield of Lightshed Partners saying, essentially, if you are looking for this company to be growing in North America, you're missing the mark. And in fact, he is saying for the past 3 years, in fact, that if you bought this stock, it's really because you are optimistic about the international expansion. That particular number proves it. And he's saying, listen, it's not hard to imagine Netflix reaching between 200 and 250 million international subscribers in the next few years. So if you're going to be optimistic, you're being optimistic because of its growth, potential growth, I should say, in India and emerging markets.
Right. We'll come back to that, Deirdre, in a moment. Want to bring Scott and Liz back, and Jeremy Owens also joins us. Jeremy's the tech editor at MarketWatch.
Yes.
Liz, you jump in on that kind of that's the broad picture conversation, I feel like, because we talked about how Disney Plus is in the game and the streaming wars are on, and all of that is true, but they're not, Disney, in the game overseas yet, really. In other words, in the second quarter this year, we'll see a launch of Disney Plus in Western Europe, and then Netflix might have maybe a little run for its money over there. But for now, to Deirdre's point, Netflix is its game, and it still has a lot of the playing field to itself, is overseas. That's where the growth's coming from.
And by the way, the number of additions is huge, and much better than expected. I think what Netflix has been trying to tell people is, yeah, Disney's important, Apple's important, all these competitors are going to be a factor, but truth is, over half of TV is still consumed the old-fashioned way. That's where we're going to make headway, and everyone is going to make headway. So there's a lot of running room here. I think, from my perspective, perhaps the most important number is 24. 24 nominations this company got in the Oscars this year. I mean, that is a gigantic thing. And I think if I were an analyst covering Netflix, I would be most interested in how are they spending their $15 billion a year on content? How is that going to impact their future? Nobody is in that game to the extent Netflix is. And I think what we're seeing now is it's working for them.
So just to add one more thing, they're forecasting for the first quarter that global streaming paid net additions another 7 million, so 8.76 for the fourth quarter. And they're forecasting another 7 million for the next one. Connell.
Which sounds
the other thing that I think, sorry, Liz, to jump on you. The other thing, Jeremy, you can jump in here, that I think is kind of interesting is that with a company like Netflix, a technology company like this that reports its earnings at 4:07 p.m., say, the stock normally moves a lot more. This is a very muted reaction for Netflix. I was looking, I think the options market, Jeremy, was pricing in about, I think, a 6% move up or down tomorrow. And if this holds, we're not going to get anything close to that. But Netflix basically told us, it seems like, told us, there's some details to go through, but told us a lot of what we were expecting it to, better in some places, maybe a little light in others. But what's your overall impression?
Yeah, I think it's time for the way people react to Netflix to change.
Maybe.
Right? We've seen this stock just go crazy right after hours after they announced the number of subscribers. But now we're seeing that change because the number of subscribers is not going to be as important on a quarterly basis, especially in the U.S. Like what you saw, this one is go up a little bit and then down. The U.S. actually missed. We're talking about U.S. additions of less than 600,000. They're expecting more than 600,000, and that's U.S. and Canada. It's actually less than 500,000 for just the U.S. And we're going to see a lot of churn in the U.S. So they're going to have to start valuing this company differently than just how many subscribers did it add. And I think that's what we're starting to see now is the sea change happening for Netflix.
Okay, fair point, Scott. Hang on for a moment. Back to Deirdre in the newsroom. Were you going to say something similar about the U.S. or what else?
I just wanted to chime in very quickly, and it is, I'm sure Netflix investors will be happy to hear that maybe there's another metric to look at because the net adds, global net adds, so that's domestic plus international, they're forecasting a lighter current quarter. So this is part of their guidance. So instead of adding 8.82 million, which is what the Wall Street community was looking for, Netflix confirming that they should be adding globally 7 million. So that's actually this current quarter, and that really is a lot lighter. Back to you guys.
That is not much of a sell-off, if that's the right after-hours quote right now. Scott, if you can come back up on this, because that is interesting. But I think sometimes people confuse the international growth with the global growth, which obviously would include the U.S.
and Canada.
There is Netflix now down by 3%. Go ahead, Scott.
Yeah, it's a pretty good reversal, though, Connell, if you look at the initial pop. And I think Jeremy's right. You've got to look at different ways as far as the sub numbers. And frankly, while this number maybe is right down the middle of the fairway, as you commented, Connell, about how the market didn't move the stock much, it's probably not good enough. I mean, as I was saying earlier, the market had rallied this stock pretty good over the last 3 months into this earnings report after what was not a great one the quarter before and certainly not a great one the quarter prior to that. And so to me, these numbers are not good enough for Netflix to maintain these valuation levels. And so that's another reason why if you've been trapped in this stock, say, in the last year or so, I think this is a chance to divest.
Okay, so that's the stock part of it. Jeremy, to go back to your points on, and Liz will jump in on this right after your comments on the business side of it. What about the future? Disney. Let's talk about it a little bit now. We know that Disney's in the game. We know that Apple's in kind of in a different way. We know that HBO's coming on, and we know the Peacock Network's been announced, and all the rest. So, What about that? I mean, Netflix continues to have to pay up tons and tons of money for content. Some people brought up the idea that maybe they have to turn to, this has been brought up a number of times this week, finally to having ads on their platform. What do you think?
Well, I think their content is going to matter a lot more now than it has, right? They've been in this growth phase. Now we're in a churn phase where consumers are going to decide almost by the month if they want to pay for Netflix for the next month, or they want to pay for HBO, or they want to pay for Disney Plus. And a lot of that is going to depend on what content is coming up. And Netflix is the one that has been getting this content train rolling, you know, and they're going to keep on putting out. And if you look in their letter, they're talking about what content's coming out in Q1 and Q2 and saying Q2 is going to be heavy. That's why they had the Q1 kind of light. They think the big gains are going to come in Q2.
And the Netflix did make some comments on the fourth quarter, despite the debut, it says, of Disney Plus and the launch of Apple TV Plus. Viewing per membership, Liz, grew, it says, both globally and in the U.S. So trying to point out to investors and everybody else, hey, listen, we know there's other players in this game now, but we're still growing, albeit, you know, in a more competitive environment. What does that environment look like to you, Liz?
Well, I mean, again, I think that the future belongs to whoever has something that you really want to watch on television or on your Apple, you know, your iPad or whatever. And as long as they have those properties, by the way, Disney does too. It's not like there's room for only one player in this game, and we're all going to be obsessing over a number of domestic subscribers every quarter and stuff. But the really important thing is who can really own your attention span, who can really own your time. I think ads, by the way, killer idea, terrible. I really can't imagine that that would be a good idea.
Because that makes them different, and yeah.
That's why we don't watch television.
No, you're right. It's a good time. Well, one time, Melissa and I have talked about this in the past. It's a good time to be creating content if you're creating good content.
That's the game.
Yeah, not a lot of people know this, but Scott Martin is writing a new sitcom about a trader in Chicago that, you know.
The secret's out. And I will tell you, your content's right, though. And the weird thing about Netflix, though, I mean, is where are they in that content game? I mean, you've seen Amazon Prime and some of these other services start to create nice shows. I mean, I got hooked on Netflix, admittedly, a couple years ago with the movie The Babysitter, which was an original Netflix comedy that's really, really good. But I think since then, their content has kind of taken a little of a downturn, and that's why Disney Plus and some of these other guys that are coming out are a legitimate threat.
Boy, I don't know if I would have went with The Babysitter as my example.
Listen, I'll admit it right here, right now.
It's really
watch
embarrassing.
It's an original. Come on, Liz.
I didn't say it, but yes. So can we make a banner, guys, at the bottom of the screen? Liz Peek. That's very embarrassing, Scott Martin. Thank you, Jeremy. Sorry you had to be a part of this. Thank you, everybody, for participating. Only down 1.5% there for
there you
Netflix,
go.
So
yeah.
there it is.